Okay, today we are talking about how to build and grow a tech-enabled service provider. So if you have an IT services business, you have a managed service company, if you have a digital agency and you want to grow it, but that's what we're going to be talking about here today. My guest today is Sean Frank. He's the CEO of Cloud Equity Group, and I'll tell you more about him in a second, so stay tuned.
Welcome to the Smart Business Revolution podcast, where we feature top entrepreneurs, business leaders, and thought leaders and ask them how they built key relationships to get where they are today. Now, let's get started with the show.
All right, welcome everyone. John Corcoran here. I'm the host of this show. And each week I get to talk to smart CEOs, founders, and entrepreneurs of all kinds of companies. We've had Kinko's, Netflix, YPO, EO, Activation Blizzard, LendingTree, OpenTable, Grubhub, all kinds of episodes. Check out the archives if you want to learn more about them. Of course, this episode brought to you by our company, Rise 25, where we help B2B businesses get clients, referrals, and strategic partnerships with done-for-you podcasts and content marketing. You can learn all about it at rise25.com or email us at support@rise25.com. And my guest here today is Sean Frank. Such an interesting story. He started what became a web hosting company at the ripe old age of 12 years old, and then got into the acquisition game, started acquiring other companies. And that evolved and became Cloud Equity Group, which is a Wall Street-based asset management firm. And we're going to talk about what they do now with M&A and acquiring companies in a moment. But Sean, excited to have you here today. And I want to hear how this came about. I mean, when I'm 12 years old, I'm like playing video games and like soccer and stuff like that. And here you're like launching a web hosting business. So, I always ask people at the beginning of these episodes about any entrepreneurial side hustles. And usually it's small. It's like, oh yeah, one time I did a lemonade stand. I did a little bit of a newspaper route. But you were legit at 12 years old, a web hosting business. So how did you get into that?
Yeah, and thanks for having me, John. Certainly a very non-traditional path in, the industry that I'm in now. Back when I was 12, we're talking, the early 2000s, it's tail end of the dot-com boom. And it's a time period where the internet is new to most end users, right? Most people don't have a computer in their home yet. If they do have a computer, they're maybe on DSL, which is like a dial-up internet. Probably a lot of people don't even remember that. And so it's very much in its infancy. And with that, there was a tremendous demand and people wanting to create an online presence for the first time. It was oftentimes kind of pointless websites. Maybe it was a blog, or would host pictures, or would post, anime characters. It was just, a novelty, and it was a very new thing, and everyone was very interested in it. And I became most interested in the coding aspect of it and how to actually compile the website and put the images there and actually make it publicly accessible. And so, I didn't wake up one day and be like, hey, I'm going to start a company, certainly not at 12 years old, but it was more so like, hey, I'm interested in learning the coding. This is interesting to me. And how can I, code these websites and put them online? And that was really kind of the starting point for, what'll eventually be my, entire career to date. And so I started doing these websites, and, I became known as the kid that could, produce the websites. And, it started off with, friends or friends of friends that just wanted to, put up pointless websites. But from there, I started to get, businesses to reach out to me, usually ones that, came from some kind of referral from a friend or something, and said, hey, we want to put our doctor's office online, and we want to have a website that just advertises about our doctor's office. And so, I started to get these businesses to reach out to me as well.
And do you recall what you're using back then? Are you using?
It was all HTML. It was even the own.
Wow.
There was nothing back then. It was free coded. Eventually these programs came out. Like Dreamweaver, and I forget there was another one that kind of made it easier to use HTML. But back then, I mean, there was no WordPress. There was no, Squarespace. There was no, any of this stuff. It was, quite literally you needed code. So started as HTML, and then eventually got into PHP, and, kind of as these other programming languages became, more prevalent and widely used, kind of learned those. But I mean, this is back at a time where you couldn't make a website yourself. If you wanted to have a web presence, you either need to learn coding, or you needed to hire a company or a person that could do it for you.
And do you remember any big wins, like big paychecks, like that were, kind of made you realize, wow, I can really make some good money here?
Yeah, it's funny. I mean, it's all relative, so I'm not going to say the amounts of the paychecks, but yeah, I
Well,
mean,
what's funny is sometimes you hear people say like, yeah, I sold my first website for $500. It took me 17 hours to build. And, I totally regretted it. That's kind of thing you hear a
no, I
lot.
mean, my story would be very much like that. I mean, I don't remember the exact amount, but I mean, I don't even think it was $1,000. But I mean, as getting back to the doctor's office, I mean, there was a pediatric office, so a children's doctor's office, home practice, that wanted me to make a website for them. And this was my first, I guess, big client as a 12 years old, call it like $1,000 or whatever it was, which is a lot of money to someone that, doesn't have any money and doesn't have expenses. It's my first kind of real big win. And they wanted me to go in and take pictures of their office and, put together a website that kind of shows the office and the hours and all of this. So that was, from what I can remember, I think that was my first kind of big client in the hosting business. And, I don't even know that I had a hosting business back then. I might have still just been doing kind of ad hoc design, but it was definitely right around there when I said, hey, I can, be making money from this. So it started as just charging for the actual web development, which is, typically like a one-time fee or, maybe like a two-time fee, but, it's the actual building of the website. And then after it's built, there's nothing after that. But once I started doing enough of these, I said, hey, is there a way that I can convert this to recurring revenue? And so that's when I started studying hosting. And, obviously I was familiar with hosting because I had to host the websites, and somehow I became friends with, my hosting provider, which is a small company. I think it was also run by younger people, and kind of learned about the business through them. And I said, hey, I can be making these websites, but then I can charge a monthly fee and continue to host them. And that's really what started my first kind of real business. It was the hosting side of things. It's a better business because it's recurring revenue. And once you get a client, you typically keep them for a long period of time. And so
Yeah.
it kind of changes the mindset. Instead of, having to sell projects continuously and it's a one-time project and then you probably don't hear
Right.
from them again. Now it's about just kind of closing these clients, and I can watch month over month as kind of my recurring revenue and my recurring revenue, income
Yeah.
increases. And it was very interesting.
Now, one of the challenges with that, because I know some people that have started, have gone down that same path with having a web development or web building company, but then, seeing the recurring revenue of the web hosting and wanting to just do the web hosting. But one of the challenges is that how do you get the web hosting clients when you're not building the website? A lot of times that's when people come to you because they want a website built, and then they take the hosting with it. Whereas like marketing as a service or as a company, just the hosting service can be challenging. So how did you make that transition as you made this realization over to a business that was focused more on web hosting and not on web building?
Yeah, it's very tough. I'll say today it's significantly more tough than it was back then. Back at kind of .com boom and tail end of .com boom, there weren't as many hosting providers. And so it was much easier to create a niche or some kind of target market. And then you were known within that, and you'd get a lot of, kind of organic growth that way, whether it be from word of mouth or, kind of targeted advertising or something along those lines. I started, obviously my first clients came from web development, and they're the ones that I did projects for, and then, had them on the hosting side. But then I really focused a lot on bootstrap efforts. And so I'd get involved in kind of online forums, whether it be hosting related or web development related or coding related or whatever. And I would just be a very helpful resource there. But within my signature on the forum, so at the bottom of any post that I did, it would have a link to my hosting company. And I really built my company that way, and just being a resource and word of mouth and just kind of, being community involvement, I think is a good way to put it.
Bit of early SEO too thrown in there.
Yeah, definitely early SEO. I mean, I had a blog back then. I was focused on, there wasn't really social media back then, but sort of the limited, like the Yelp and whatever else, the Yahoo, I think had some kind of social media platform.
So posting on these
there.
boards and chat boards and things like that.
Yeah. So a lot of bootstrap efforts like that, grassroots efforts, but it grew over time. And, there was definitely a period of time where I started investing in advertising and marketing. And again, I think it was a lot easier back then because there was, much more limited competition. Today, it's significantly more difficult for hosting. Yeah, I mean, I think the keyword hosting is like $150 a click on Google. It's tremendously competitive. And back then, an average just normal retail end user hosting package, might be like $15 a month, $20 a month for a simple website. Today, you can get that for like $2 a month. So not only has the cost of advertising gone up significantly because of the competition, the price that you get for the hosting has gone down significantly. So not really a good relationship there.
So how do you exist in that kind of environment in a market like that where prices have gone down, competition has gone up significantly?
It's tough. And, we see that across all technology. I mean, game servers is another area that my business eventually expanded to. And it was a similar trend there. As you see technological advances come out, it becomes cheaper and more economical for the hosting provider to operate. And, inevitably, with low barriers to entry, it creates more competition. And then, eventually you have to compete on price and pass those savings down to the consumer. So it's definitely not ideal to be in any of those, industries, but, you really focus on ways that you can command a higher price to your end users. And so in the industries that I mentioned, like hosting or even game servers, one way that you can do that is service. And so that's always been a very important attribute of our business, is trying to have the highest quality service to our clients. And so, when I was in the hosting business, we focused a lot on having very quick response times. I mean, I think we had like a 15-minute response time guarantee on all support tickets, 24/7 live chat, 24/7 phone support, but really being focused on trying to help the customer in a quick way as possible, and not just kind of directing the customer on what to do or telling them that we can't, support them. And so in an industry where there's increased competition and prices are getting driven down, I think that's one way that a business can try to compete and really justify a higher price point, to say, hey, we're not just this commoditized product like a hosting service, but we actually provide you, good quality technical support, customer service on top of that.
Now, at what point in this journey, you start out in middle school, you're in high school. At what point did you start hiring people? Were you hiring people that were working for you while you're, showing up to high school?
Yeah, I think even before that, I mean, I'm fairly confident, like by the end of middle school, I had a couple of employees. There's one forum that I really used as a pivotal area to learn a lot about the hosting business and the technology and how to, really legitimize the business, is this forum called Web Hosting Talk. And it has a section in it for people who are looking to hire or people who are looking for jobs. And so I got a lot of early hires from there. They were typically
remote, I imagine. Then they weren't.
Yeah, they were
okay.
remote. We had no office back then. I mean,
because this is even early days
house.
of hiring people overseas and offshore staffing. There weren't as many. Maybe Odesk was around in the early 2000s. I can't remember.
Yeah, my first hires were all overseas. Just contractors that I found remotely. And looking back, it was definitely a lot of trust that I put in them. I did an interview, and I did kind of the limited reference checks and whatever that I could think to do back then. But at the end of the day, I handed them the keys to, my servers. And, if I made a bad hire, or someone wanted to,
mess with
me, they could have ruined my company, So it's definitely, it was a lot of risk. But, some of my earliest hires are people that I still do work with today. They don't work for us here at Cloud Equity Group, but when we need to hire a contractor to maybe help with a project or to step in with one of our portfolio companies, I mean, some of the early guys are people that I still, 20 years later, have a relationship with.
Do you, did you grow up in an entrepreneurial family? What did your parents think of all this? You're building?
No, not an entrepreneurial family at all. I guess my grandfather, had started a business. But, my parents, my mom was a teacher and my dad was a doctor. So, nothing really there. I think, I became interested in technology, and, I'll attribute this, I think, to my dad. My dad's always been very interested in technology as well. And, as I look back to a time where like computers were just becoming accessible to homes, we had probably 4 computers in our house before, the average family had 1 computer in their house. And when I look back at like internet first becoming available, most people were on dial-up or like maybe a DSL connection, and we had, already a cable connection. So my dad was always very interested in technology. And I think that's really what kind of got passed down to me. And, having access to computers and internet and websites, I wanted to learn more, and hey, how can I do this myself? And it really just sparked kind of my own curiosity and really just grew from there.
Yeah. Now, we were talking before, and you said there was a moment in middle school, I think you said it was, where you realized this was a legitimate business, and you were starting to make as much or more money than your teachers. Take us back, talk to us about what that was like, that kind of realization.
Yeah, it's an interesting thought. I never really thought much about money because, I grew up in a family that was very supportive. And, as a middle school kid, or even when I got to high school, man, I didn't have any expenses. My parents paid for everything. I needed clothes or, extracurricular activities or sports or whatever. So I had no need for money. It was nice to get, but I had no need for it. And so I would just reinvest all of my money back into the business over and over and over again. And I think that was a really key thing that helped my business to scale, is that I didn't need to take money out of the business. I could just reinvest all of it and, get a return on sort of that reinvestment. But yeah, I mean, so with that, I never resonated like how much I was making or anything like that, because I wasn't keeping it at the end of the day. I was going back in. But yeah, I mean, there was definitely a point sometime in middle school where I said, hey, the money that I'm earning each month, even though I'm not, keeping it, I keep reinvesting it. Like, this is a decent amount of money. I mean, I'm making more than some adults. So I think that was kind of a pivotal point in my entrepreneurial career, where I said, hey, maybe this is a bit more than a hobby, and this is actually turning into a legitimate business.
Yeah. I'm curious. My son Mason just came in here from after school. He's 12 years old. You started your business at 12 years old. Mason is he actually just made his first sale on eBay, which he's really excited about. So he's been delving in a couple of different entrepreneurial endeavors. If you think back to 12-year-old you, what lessons can you reflect on that you would want to impart on young 12-year-old Sean, and by extension, all the other 12-year-olds out there?
Yeah, I mean, I'll just speak to 12-year-olds generally. I mean, I think that when you're young, and I've said this before, I think that when you're young, it's the best time to take those risks, right? You're not dependent on your money to live. You're not supporting a family. You're not, you don't really have expenses. And so if you're going to, go out and take a risk and say, I'm going to try earn some money, but I'm going to just keep putting it all back in, it's really the best time to do it. I mean, I heard the same advice from, other people, and this was many years later, just talking about really careers and people's careers generally. I mean, you can obviously, be much more tolerant to risk when you're younger, and, the money, I guess, is less important for survival and other things. And so, I think for 12-year-olds out there that, maybe have a passion or a dream, or, have an entrepreneurial spark and want to try do something, I mean, just go for it, whatever it is. And the thing too, is that there's this misconception that, you need to know exactly what you're doing and, have this well thought out idea and you're just going to stick to it. And, if you don't have that, nothing can happen. I mean, that's not really true. I started as a hobby, and it just, as I was doing it, I kept seeing new opportunities, and from those new opportunities, I would pursue them and see other opportunities. And it's really a cumulative effect. And that really took me from building websites at 12 to, running a private equity firm today.
You realize how like implausible that sounds just when you say it in one time.
I mean, I would have thought it was too. And that's why, I always reiterate that fact, is that you don't, need to know where you're going. Just being on the journey is, part of it. I would have never thought at, 20, even I would be in asset management. Back then I was still focused on, being a strategic operator and having this company and being a CEO. And so, life will always present opportunities, and, it's just about seeing those and, wanting to take advantage of them or pursue them.
Yeah. Did you take me back to some of your early acquisitions? What was your first acquisition or second acquisition, and what motivated them, and how did you get through them when you were kind of figuring it out?
Yeah, so I think I actually spoke about this once. I had a talk at Harvard a couple of years ago, and I made reference to this. I don't recall the details, but my very first acquisition was actually my hosting provider that I bought for $800, and this was as probably like a 13 or 14-year-old
company
kid.
You were talking about that you were learning from. You ended up acquiring them
for $800.
For $800.
Yeah, I knew nothing at all about hosting back then. I knew nothing about technology, nothing about infrastructure. I had no idea what I was doing, but I went to my dad and I said, hey, can I have an $800 loan? I think I can pay you back, $15 a month for the next, whatever. I forgot what the economics were. And he, for some reason, just said, yeah, and gave me the money, and we made a little payment schedule, and I paid him back monthly until, he got all his money back. But that was my very first acquisition. The thing that I liked about this industry, your hosting specifically, is, it's all the recurring revenue. And I was able to see at a young age that, hey, if I am collecting revenue and I know what my costs are, there's profit. And if I just focus all my profit to paying back my dad, because I didn't need money for anything, I can, really just focus on, how quick can I pay him back? And in my first acquisitions, it really just came down to time to repayment was the most important metric for me. And, I was able to find opportunities where I can pay him back in like 6 months. And, as I did more of these and, had economies of scale to reduce costs, I mean, I got down to like 3 months at one point.
So why was it so cheap?
That was a small business, but
Okay.
yeah, I mean,
But
it
this
was
was
my
the
first.
company that, I mean, this is so interesting because it was the company that you were learning from. You were using them, you were reselling them to your clients, and then you end up
Yeah,
acquiring
so
that
I
company.
started exactly. Yeah, so I started off with what's called a reseller plan when I first got into hosting, and so I really just had a hosting account that allowed me to create other hosting accounts as kind of a white label service. And so it's a very affordable way that most people, start off in hosting. You don't have to invest in infrastructure. You don't have to invest in servers or anything like that. It's just, a low monthly cost and you have the plan. And so, somehow back then, like live chat software didn't even exist. And so the
Mm-hmm.
way that you would get support is AOL Instant Messenger. And so the company had an official channel and, it's a small company. So there were just these two founders and, they were providing the support. So through, support engagement is how I developed a relationship with them and got to know them. But yeah, at some point they, I guess, decided they didn't want to be it anymore. It was a very small business, obviously. Can't even remember what kind of revenue it was making, but,
It can't have
they
been
sold me
that
the
big
business.
if they were, they
No,
sold it
no,
for
no. I mean, this
$800.
was tiny. I mean,
Yeah.
like I said, I had no idea what I was doing, and my dad trusted me with $800 to buy it.
Yeah.
But it really sparked, and I won't even say that was a successful acquisition at all. I mean, I literally knew nothing about kind of the technology side. I mean, it probably didn't make money, and I was able to kind of rebuild it a little bit. I did pay him back, obviously, but that's really what sparked everything. And I started going from that tiny business to ones that were a couple $1,000s to ones that were more than that. Till doing acquisitions for several $100,000. All while in kind of middle school and high school,
What
probably high
was
school by then. But
what was the first one that you did that made you kind of stop and think, oh man, what am I doing here?
it's funny. I don't know that we necessarily feel it anymore, but the night before closing of any transaction, regardless of size, I mean, you always, at least there was a time where you would always just kind of second guess everything. Like, am I making the right decision? Is this a smart investment? Am I going to buy this and it just flops? And you get nervous.
Mm-hmm.
I think it's a little different today because we're much more sophisticated in the investments that we do. But growing up and when I did a lot of these early acquisitions, I mean, it didn't matter the size. You always got that feeling and that kind of unease. And really, the first month, you're watching your numbers, literally daily, just to be on top of, is anything not as expected? Did I mess up anywhere? But I think that, with every new largest transaction is, a new milestone and they're always exciting. As you continue to do them and you get economies of scale and you can say, hey, this guy's operating at, maybe a 10% margin, but I know that I can operate at a 25% margin. It's only take me 3 months to get there. It keeps being exciting and they keep getting better and better. They were all exciting, every acquisition that we did. But certainly any milestone would be kind of the largest acquisition, at that point in time.
And what point did you decide that this is something I want to pivot into professionally into a private equity? Did you get burned out on running the hosting company and decide that you just didn't want to do that anymore?
Yeah, so that's a good question. So got a lot into M&A, and when I was in high school, I became connected with a guy named Andrew McKelvey. He was the founder and original founder and CEO of Monster.com, the one who had taken it public. And at the time, he'd already exited Monster, and he was running a private equity firm in New York called Blackfin Capital. And so that was really the first time in my career that, I had a mentor that helped me to legitimize my business. Up until that point in kind of your early education, you don't really take any business classes. And so everything I knew is what I had learned on taught myself. There's no formal education there. And so it was the first time that I had a resource of someone who actually ran a business and was very successful. And his story too is also very entrepreneurial, but was able to share a lot of insight. But in addition
And
to running the business,
how did you connect with him, by the way?
so he had a scholarship program for young entrepreneurs called the McKelvey Entrepreneurial Foundation. And tracing back to his roots, I mean, this was a guy who his original career was, I think, like selling papers, and then started a paper route in his local community. And, that transitioned into some other venture and somehow that transitioned into Monster. And, obviously that blew up and became a publicly traded company. But so he wanted to give back, and there's a number of different philanthropies he had, but this was one where he wanted to just become a resource and connect with young entrepreneurs. And eventually this would go partially towards a college scholarship. And, there's a lot of networking component and once a year he would do an event that everyone comes to. So it was a cool thing, but I don't remember how I found that. Maybe it was word of mouth or Google or whatever, but, applied for that and got accepted. And through that, I became close with him and his family, and he was an invaluable resource, but, really taught me how to legitimize the business, but also taught me how to legitimize the M&A process and how you can borrow money, for example, to do an acquisition. You don't have to use all your own money, and why that's better. And, these things that are very intuitive now, but back then, and, as kind of a young high school student, wasn't really that intuitive. But he really helped to accelerate and legitimize, I think, a lot of the M&A that we were doing. And at the time, it was just really buying similar businesses to mine to either kind of grow my existing company or maybe help us to expand into a new product line or different vertical. So just doing a lot of these acquisitions. And what I found is that I really loved doing the acquisition and the M&A side of it, but I didn't really love the idea of being the CEO, the guy that needs to oversee everything, and you're dealing with the HR issues, and you're dealing with, the vendor relationships and the customer relationships.
15-minute promise of responding to every incoming inquiry. I mean, that people get burned out on that sort of thing.
Yeah, you get burned out. And, especially when you're the guy who starts a business. And I think this is the same in most businesses. I mean, your customers, your early customers. And so you might have a support team and, a customer needs support and they go to the team, but then the customer has an issue and they call you. Yeah. And, it's a lot of stress. And I didn't necessarily, it wasn't appealing to me. My company was growing, it was very profitable. I was making a lot of money from it, but it just wasn't what I wanted to do. Mm-hmm. And the M&A side was very interesting to me, and just learning you can, buy businesses and, how you can structure the transaction to make it, a little bit more lucrative or better. So it requires less money from you. And, it was a great model. And so, I went to school at the University of Pittsburgh. I was still running my company at the time. And I majored in finance. And, I think that's when I started to learn about, more about investments and, kind of the idea of, I don't just need to be buying companies to grow my business, but there's a whole market out there of businesses that are in the business of buying, selling companies. You buy a company, you add value to it, you grow it, and then you sell it and you give a return to your investors. And so it really kind of clicked that, hey, I have the industry expertise. I can point to a track record in growing and scaling my own business. I think at that point I have, financial expertise, at least that I know what I'm doing. So why don't I, go and start a business and say, hey, I'll leverage investor capital and I'm going to find undervalued businesses and I'm going to scale them and I'm going to flip them. So, we founded Cloud Equity Group in 2013, and it was an independent sponsor model. And so we quite literally would try and find an investment opportunity that we thought made a lot of sense. And it was a business that for whatever reason was either undervalued or, not reaching its full potential, and we're very confident that we can grow and scale. Then we'd go to, at the time, predominantly friends and family, and saying, hey, give us money to, help buy this business. And, this is what we're going to do over this period of time. And then we're going to sell it. And here's the return you're going to make. So a very, very labor intensive process. It's certainly not efficient when you have to first find the opportunity and then try to raise the capital and kind of do everything in conjunction. But, it's nonetheless how a lot of asset management firms start. And we did that from, really 2013 to 2015, did a handful of transactions in that model and showed success. And, each time the transaction was getting larger than the previous. And then finally in 2015, we were able to launch our first discretionary fund. And so that means that investors make a commitment into a fund and we can draw down on that capital commitment as we have investment opportunities. So it's a much more efficient model. We can move faster. We can often be more competitive, especially when we're competing against, other bidders who maybe don't have committed capital or have to put in offers, contingent on some kind of third-party financing. And we're really able to start accelerating the pace and the rate at which we were doing transactions. We were able to start doing, larger and larger transactions, and, just continued to, compound until we eventually got to, where we are today, where we're, we only invest out of committed funds. All of our transactions are, pretty sizable, come with teams, small and 5 employees. And we just closed a transaction last month with probably 45 employees. So it's allowed us to really scale and grow quite significantly over the past, couple of years.
And as you made that transition from, as you said, friends and family to more institutional capital, did your unconventional background or the fact that you were focusing on this very specific niche of type of company, was that a challenge to get the institutional capital interested in investing in your fund?
Yeah, so it's yes and no. So look, we a lot of our or the problem we generally had starting up is, we're young at this time we started. And so we were always able to articulate, here's the success that I've had up until that point. Here's the sector expertise. Here's the industry relationships I'm bringing, everything on paper. If the same thing was being said by someone in their 50s would be, a no brainer. This sounds like a great opportunity. But the fact that, I was in my young 20s at the time that we started this, we got a lot of, I don't want to say pushback, but, people recognize that, I'm still young and you don't know what you don't know. And so, friends and family, obviously, were able to take a risk just knowing me personally and had a lot more comfort there. Our first groups of outside investors were, people that, maybe the story resonated, they had a child that was entrepreneurial or, remind me of the kid or whatever, was able to connect and, they were willing to kind of take that risk. And so it was really a lot of people needing to, you're getting those first investors who were able to look past the age and trust the strategy and the expertise and the track record, willing to take that chance. Once you start to develop the track record and you say, hey, yeah, I'm young, but we've also now done this with outside capital for, so many years, and we've done X amount of transactions and we've exited this many transactions, then the story becomes a lot easier. And so, the sector expertise and non-traditional path has always been a very good talking point, and it's always been a very good story. But I think the biggest bottleneck or the hurdle that we had, when we first started the asset management firm was really just getting over age bias and getting people to say, it's okay that, the founder of this firm is in his 20s and not his 50s. He still knows what he's doing and can deliver returns.
Yeah. Now, one of the projects you've worked on is one called Brightworks Digital, which has been buying smaller digital agencies, kind of combining them, professionalizing them. Which seems like a bit of a jump from the web hosting type of business. So talk a little bit about what your experiences have been like in that area and maybe some of the ways that you've been able to leverage the previous experience in order to put those types of deals together.
Yeah, no, certainly. So, I mentioned before we started off, independent sponsor model. At the time, we were exclusively looking at hosting providers because that's directly what I was doing. But over time, as we were able to develop a track record and proof of concept and do these investments, started to branch off a bit. And today we invest in what we broadly define as tech-enabled business services. So branched out to really any kind of recurring revenue, service-oriented business that, promotes, powers, enables, either cloud or remote connectivity or web presence. Kind of the dynamics of these businesses are very similar, and there's a couple of market attributes that we really like that kind of drive into our investment thesis, but have really branched out a lot from just doing hosting, which was our bread and butter when we started. But yeah, digital agency is one area that we're very interested in. We launched a platform company earlier this year called Brightworks Digital, and so we've done 3 acquisitions under that platform company so far. A web development firm here on Long Island, Corcoran, eBiz Universe, which is a web development and search engine optimization firm based in Illinois. And we just recently closed, not announced yet, a search engine optimization company down in Miami called On the Map. It's the first time I'm publicly saying that. But yeah, just
nice.
really trying
breaking news here. Nice.
Breaking news. Press release coming soon. But yeah, thought process being really kind of buy and building a full service-oriented digital agency. So we're looking to do everything from web development, which is obviously an area that I had a lot of experience in once upon a time, to managing Google Ads, to managing social media channels, to search engine optimization, to full gambit A to Z of anything digital marketing related. So promotes or enhances online presence, drives more traffic to website, increase conversions, all of that. And so focusing on building a company that not only does the full gambit in terms of services, but also can support the full gambit in terms of clients. And so unlike one of the brands, it's much more focused towards, kind of small businesses or, maybe smaller, medium-sized businesses. So focusing on lower price point, more affordable service base. And our recent acquisition, much more oriented towards more medium and larger size businesses and much more service oriented, but much higher price point. And so not only trying to build a company that does everything in terms of service offering, but also can provide a service at kind of any price point across its different brands. So we've done, 3 acquisitions there so far this year, and, hopefully we'll do another 2 or 3 before the end of the year. But it's an area that we're very interested in.
And how do you manage to put those together under one brand and for them all to operate cohesively, because you hear statistics sometimes about those types of roll-ups, there's a high likelihood of failure. So how do you know that they're culturally going to be a fit, that they're going to work together? How do you manage that piece of it?
Yeah, no, great question. So one of the core things that we like about the different subsectors that we invest in is we invest in very standardized industries. And so what that means is that if we look at 5 companies within any subsector, the technology stack of, maybe 4 of the 5 are, almost identical or very, very, very similar. And so it eliminates a lot of the risk of what you're describing in just that fit. I mean, as you look at companies that do these roll-ups and these buy and build strategies, just like you're saying, I mean, one of the biggest risk centers that you have in that is, can company A really jive with company B, or is it just going to be too different that you can't mesh? And so we invest in industries where, from a technological or infrastructural perspective, that risk doesn't exist because it's very standardized and the companies are already using very similar infrastructure. So from there, from an integration perspective, the culture and the people, is one of the biggest risks. But, we've been doing this for a long time now, and we have a great team of people that's very good at kind of articulating and working with, people and alleviating concerns and mitigating kind of the cultural aspect and making people, be excited about, these acquisitions and being part of a larger organization. One of the things that we can often articulate to the companies that we invest in is we provide now much more opportunity to the people and more resources to the people. And I think that's something that really resonates from day one, at employees at a company that we acquire. Before acquisition, they work for a company that maybe is doing, 10 million a year in revenue, whatever it is. And that's the plateau, right? It's an organization that maybe has 40 people and there's only so high that they can get. And there's only so many functions that they can, go to. And there's only so many resources that they have because they're limited to that, what's by definition a small business. But from day one in acquisition, we're now bringing them into a much larger organization. And so it creates opportunities for career growth. Now they can scale being part of the large organization. It creates the opportunity to maybe change horizontally. If someone likes the company and likes the culture, but doesn't really like what they're doing and they're looking to do something else, we can create those opportunities. We provide more benefits and resources. And so it's really something that's allowed us to be successful in our integration plays and really just being able to articulate to the team all the benefits and enhancements that they get now being part of a larger organization and the things that we can bring to the table.
All right. I want to ask, we're almost out of time, but I want to ask kind of a little bit of a selfish question, because our company has been, and part of the reason I booked this interview is because I was just curious to learn from you. And we've been looking at doing acquisitions of smaller podcast production companies. And what I'm struck by is that, we spend a lot of time thinking about finances and how you set up funding and all the just kind of like technical pieces and, is the software stack the same? But so much of acquisitions is managing the psychological or the emotions of the founder or the seller. As you think about this, how much of your energy and attention goes to the psychological elements, managing the emotions of the seller versus all the technical elements or the financing and things like that?
So fortunately, I have a team that does this, but so we invest primarily in lower end and lower middle market, and so that means that we're oftentimes transactioning with the founder of the business, who is the seller, right, original founder, and so there is a lot of emotion there. There's oftentimes seller's remorse. There's oftentimes it's an unsophisticated seller. It's his first time selling a business. It's his baby, and it can be emotional naturally, some transactions are easier than others, and some can be very, very difficult to, work with the seller that, every day is questioning if it's the right thing because he thinks about how he's been doing it for the last 20 years and he's thinking about his employees and his clients and all of that. But fortunately, I have a great team behind me that, has a lot of experience in dealing with that. And, I think a lot of time it just comes down to just compassion and relating with the seller. I mean, we don't push anyone to move faster than, they want to. We try to be very transparent with sellers. One of the things that's very unique about us is that we offer the opportunity if they want to stay on in some kind of capacity to kind of remain with the business. And so it's very much a case by case basis, and it can vary based on who the seller is. But no, it can be a very difficult process, and it require a lot of hand holding and just kind of a shoulder to lean on, and dealing with some sellers who are emotional and just unsure in the process. But
yeah,
fortunately, I have a great team that's able to manage that.
All right, last question. So I'm a big fan of gratitude, and if you look around at, let's say, peers and contemporaries who've helped you along the way, maybe mentors, who would you want to shout out? Who would you want to thank for helping you in your journey?
Yeah, so I mean, I think a big. I'll answer in two ways. I mean, certainly all of our earliest investors, people who are outside the friends and family who, took, a chance in our early investments and said, hey, we're going to give these guys a shot, recognizing they don't maybe have a lot of track record and, they're young and whatever. I mean, that's obviously very important to us. And really, I guess that translates to all of our investors. But if I had to kind of single one person that I think was very pivotal, I had a friend, Josh Sassone. He ran an asset management firm also here in New York on Wall Street. And he was very integral, I think, in our early days, making a lot of connections for us, introducing us to a lot of service providers, capital intro firms, some investors. But some of our earliest, most meaningful relationships came from that. And so I would definitely give a shout out to him in helping pave the way for, us getting to where we are today.
Sean, this has been great. Where can people go to learn more about you and learn more about Cloud Equity Group?
So best place would just be going to our company's website, which is cloudequitygroup.com.
Excellent. Sean, thanks so much.
Thanks, John.
Thanks for listening to the Smart Business Revolution podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.